Assalamu alaikum, Ali and Waleed. Let me unmute you guys.
Walaikum salam.
So,
Welcome, Sam.
hello everyone, whoever is present. I'm Khadija Usman, the founder of Fempreneur, and today we have with us two brilliant minds, Ali Agha and Waleed Iqbal, the co-founders of Aamdini, on which they will elaborate just in a little while. Ali and Waleed are both LUMS graduate, and they went on abroad to complete their higher education, and they have a lot of experience in investing as well. And today they will be educating us on how to make wise investments and how we can start with little money. Like we don't need to have a millions to make a millions. Right, Ali and Waleed? I'm handing the floor over to you. Please tell us more about Amdani, your journey, and at what point did you both decide that we have enough experience in investing now, and perhaps it's a good time for us to team up now?
Thank you so much, Khadija, for inviting us both over here. So I believe you have introduced us. I will just spend maybe a quick couple of minutes just to add on to that and answer all your questions as well. And I'll also then let Waleed give his part and his 2 cents on this. So as rightfully mentioned, so I've been I've been associated with the banking sector for the last I think maybe 12 to 14 years now. I've done an undergrad from LUMS. I went on to do a finance degree in Amsterdam, and I did an MBA from INSEAD. And post that, I'm still associated with strategy and the banking sector in general. So investing is more like a hobby, an interest, something that we've been doing off and on for a long time now, but more so maybe in the last maybe 6 to 10 years, there's been a increased focus in terms of where to invest, really understanding how to invest, and I think the struggle has always been there. I think even the first time when I started investing, I think I invested the first stock investment I made was in 2006-7. When as soon as you graduate, you want to do all these things that you study in college, but the problem and the struggle is that things have never been that easy and that easy to understand, and you want to believe that it's easy to understand, but it's not, unfortunately. So that thought has been, with me as in since a long time. But it carried on. We went on with life. You study, you work, and you gain experience, and then you try to connect the dots. And I think the more you gain the experience, you understand how you can solve the puzzles and try to really address the pain points. So, I mean, personal investment. So I invest in the US market, I invest in Pakistan market, I invest in the UAE market as well. And it's not only in the stock exchange. I also enjoy doing investments which are more private in nature and more unorthodox and not available in the markets. So that's the broader interest that has really prompted the concept of Aamdani. Aamdani is also driven by the two core concepts. One being making the investment process, investments simpler, and also really gaining the trust of the individuals and the public and retail investors, because I do understand there are a lot of opportunities, a lot of options out there in the market. There are a lot of banks, a lot of mutual funds, a lot of people, a lot of gurus, and a lot of everything on the internet. But I felt that when you're associated with a sector and you've started in a sector and you're doing it for yourself and it's working for you, and you're understanding things from a customer perspective, it's really to address the pain points. So that is the real concept. He's also very interested in investing. He's been doing it since a young age. He'll elaborate more on that. And because he's from LUMS as well, we were in a common group. And that's where we connected and we took things further. And then we decided, we talked about what we thought was the problem, and we wanted to address it. I'll let Waleed introduce himself quickly, please.
Thank you, Ali. So I did my undergrad from LAMS too, but I am a lot more junior than Ali. So he's a bit more experienced than me. So I did my undergrad last year and I made my first investment when I was in my first year freshman year. And that time it went pretty bad. I had 200K invested and I was left with around 50K in a span of 3 to 4 months. So after that, bit by bit, I built my investment, I built my portfolio, and it went good. I started the points that were disturbing in the market, that were really a pain points for the individual investors. So a corporate investors has every sort of information that's available in the market through mutual funds, through the personal brokerage that is offered to them. But a retail investor who steps into the market with 5,000, 10,000, he or she is not given the same amount of leverage, the same amount of information, the same amount of communication that is offered to corporate clients. So in that term, they suffer a lot, and they suffer in terms of the investment they make. They get into penny stocks with no realistic value, no intrinsic value, and they end up losing money. So that retail investor. So after that, I started investing in Pakistan Stock Exchange, and within a year, I moved to New York Stock Exchange, and I realized the potential the stock exchange in. Hello, can you hear me?
Yes, yes.
I realized the potential in the United States market because of the reason that out of every two household, one household is investing. They are into some sort of investing, mutual funds, 401k, retirement plans. But in Pakistan, 5 out of 100 households are investing, and there's no information. There's no like collaboration between the retail investors and the markets. And it seems like a abstract idea. Whenever you tell someone that you are investing in markets, it seems like something is very big happening, and you don't, and a retail investor, a commoner cannot really get into it. So for that reason, we started investing, and we have a mutual group of lumps. So the questions, the amount of queries we had in that question was a really interesting factor to consider retail investors as a potential group, as a potential target market.
Mm.
And that's why we created Aamdini so that retail investors could really understand investments.
Yes. Now the thing, Waleed and Ali, is that people are not aware of the different avenues of investments. So how do you first create awareness in them that that these are the avenues available? How are you going about creating awareness?
So,
Yeah, please carry on.
so, so initially, what we plan is we amount to reduce the amount of technical terms that are used in the market. So a
Hmm.
commoner won't know what is RSI, what is Bollinger Bands, what are oscillators. He'll be really interested in the fact that if he has invested in a product, invested in a share, what is the company offering to the shareholder in terms of return in 1 year, and what products do they offer? Like if I'm going to ask you that if you are going to invest in XY company, you should ask me that what products are they selling? Do they have a scope in the market? Will you as a consumer buy them? If you as a consumer will buy them, you should buy their shares. If you won't buy them, then you won't buy their share. It's as simple as that. So it's really about eliminating the jargons and allowing people to know that the products a company offers is what. Hello.
And someone is unmuted. Just let me check.
Okay. So the products a company offers is effectively the value it offers to the shareholders. So the consumers really need to focus on the products that a company is offering in order to buy a share. It's as simple as that. So for that purpose, we are trying to get marketing teams, we are trying collaborations, we are approaching students at universities and the societies that exist on social media platforms or generally, so that we can create awareness, we could help them know how can they really invest on their own or by taking help of a professional.
Uh,
I'll just
so
add on to
yes.
I'll just add on to just to summarize the question. You rightfully pointed out that the pain point exists, and I think just to summarize, it is one of two things. As you would be aware, there are a lot of platforms right now that exist that will give you information. You'll Google it. Everyone's going to tell you, okay, open this app. This will tell you about something. There's another app that'll tell you where the market is going. And I think we need to really take a step back and really, like Waleed, mentioned, why are you buying a stock? A lot of stocks right now in the Pakistan market rally or increase prices, even if they're defaulters or they're defaulting on the loans, the bank, the companies is bankrupt. There is nothing behind the company, but because it's a supply-demand dynamic, and a lot of retail investors are investing, unfortunately, unaware retail investors who are just making decisions of investments based on the broker. Now you need to understand that broker has got a malaligned incentive in terms of making you trade. That is something that retail investor does not know. When a broker advises you to buy something or sell something, he's actually making commission by the number of trades you make. So he doesn't know much. So I mean, if you'd ask them why do they think something is going to happen? I mean, it's really funny if you just open any of the YouTube channels, and I was looking at a YouTube channel where someone was with a handle, some guru, and he was explaining technical analysis, which is essentially reading charts. Now charts just basically tells you how the demand supply is and what the market is doing. But should that really be a parameter for you to put your money into a company? I mean, I think there is a bit more to it, which is what Waleed explained. You need to understand where you're putting your money. What is a company? Why do you have to invest in shares or in the market? How has the market performed in the past? And really take the analysis, or technical analysis, as an entry point. What that means is that, I mean, in the long run, all will be well. But if you're investing in a good company, even if you do it at the wrong time, let's suppose you bought it when it's, let's say, right on the top and it's going to fall down, that's also all right. Because in the next 1 year, 2 years, if it's a fundamentally strong company, which means it's generating something, it has a product that you're buying, I'm buying, there's a good reason and plausible reason it'll do well in the long term. So it's really changing that mindset, and we aim to do it obviously by and we're not very let's say rigid in terms of we are giving you a recipe and telling individuals this is what we are saying, and you just ingest it. It's more in terms of understanding the market and really considering ourselves as a retail investor as well. So like Waleed and I both, we are as common investors as everyone around us, and we try to, and we want to, or we aim to take that logic and that mindset forward in terms of understanding who is investing, what their questions are, and really educating, and not only educating, really getting to the broader cause, making people invest, making them understand where they're investing, and then generally, it's a twofold process. I'm sorry, I was a bit long, but it's not really a summary, but yeah, it's true. Thought I'll allow.
Yes, so Ali, what is the minimum amount that one can start investing with or start building the portfolio with? Is there a minimum amount?
I think generally brokers, I mean, if you ask me in terms of you opening an account, I think you can start with as little as 5,000 rupees as well. The problem is certain brokers may not be too excited if people start with that little amount. Like I mentioned, there are commissions involved, and there's a malaligned sort of incentive mechanism, but you can start with as little as 5,000. And honestly, there will be quite a lot of brokers that will be okay in opening that account with the minimum amount that is possible. So yeah, you can start from there. See, the reason why a reasonable amount is sometimes suggested or recommended is because certain stocks or certain companies, their stock price is really its value is, let's say, over 200 rupees. So you won't be able to buy many of those. And let's suppose you want to diversify your portfolio, right? I think the best part is you have to diversify your portfolio. When you're diversifying it, how many can you buy with 5,000, 10,000 rupees? So, but that should not stop a person from investing. And I think the other key element that we need to emphasize is the investment is not something, and I've seen this quite a lot actually. I've seen that at home. Many people that I know, that in their mind, investment is more in terms of they have a lump sum amount somewhere, and they want to just take that money and put it into the market, and some recipe, magical formula is cast onto that money, and suddenly doubles or becomes triple. That's probably the reason why you would see huge cryptocurrency craze happening right now in Pakistan as well, because it's such a volatile market, which means it fluctuates up and down so much that people are seeing overnight returns, and they can go up, but they can go down as well, and they go down more then they go up, or they can go converse, but you can't predict the market. So that's why it's very important that you understand what you're doing, and as long as you go with a plan, by and large, you should be fine. That's my view as well.
Ali and Waleed, um, this is a question to both of you. That what do you think a investor or a retail investor should see in a company? Like, where does Aamdani step in and help the end customer make a better decision? That, this is the stock you should be investing in. What are the points that you see that, this is, do you see the total revenue of the company, the market cap? What are the like five topmost things you see when investing in a company?
So again, it'll involve some bit of technicals. That'll involve jargons again. But if you want in terms of a recipe, there's no fixed recipe. It varies from sector to sector. For example, in sectors that you have a rolling basis, like grocery stores where you need liquidity, you'll more give high preference to liquidity. Whereas in tech startups where you don't need such liquidity, you won't give the same amount of weightage to that. So essentially, what Amdani is about helping you to figure the scope of a business, of an industry in the market, and then allowing you to specify or shortlist the options you have. For example, if you want to start a business, like say you are interested in a tech startup, you can't have 4 million, 500 million with you, and you can start off with a tech startup right away. So what you can do is you can invest in a tech startup that has shares trading in Pakistan Stock Exchange, so that you can be part of the success of the tech startup, of the tech boom in the market.
Mhm.
So that's where Amdani steps in. So we help you to get the sector wise or the industry wise formula for that. We guide you because it's essentially, even after you know investments, understand investments better, you still need a professional to guide you throughout the process.
Mhm.
You have to read statements to do that. We can eliminate jargons to make it simplify for you. Like for example, if you want to know about what a Nishad Mill is doing or what XYZ company is doing, we'll just elaborate the whole product line that they offer, their operations. But when you have to get into the numbers, it will still involve some technicals. And that's where Amdani steps in to simplify the technicals, to give you a precise decision whether you should buy this or not, what should be the target price, how you should sell it, and what are the main factors that you should consider while having a portfolio. Where should you invest your money?
Okay, so
Let's elaborate on that.
I have a
Yes.
question. Like,
Yep, sure.
you both have been investing in the New York Stock Exchange as well. So,
Yep.
over in Pakistan, since I've been investing too, and I know for a fact that the brokers and the people, they're mostly, as you said, malaligned. They don't even know themselves much about the companies that are being that the investment is being made, and they don't have a lot of knowledge about that. So in the states, are the brokers more educated? Are they more, do they guide better? What is the difference that you have noticed in both the markets?
Hmm. Can I start with this?
Sure, Willie.
So in US, essentially brokers are not very interested. You can have a bank account and you can start trading from that.
Okay.
You can have your app installed on your phone, Robinhood. It charges zero commission. It doesn't guide you. Just give you some sort of disclaimers that don't invest 25%, for example, more in one stock. So they don't guide you. The thing is that they have more market participants. There's a high number of retail investors. And when there's a high number of retail investors, the mispricing element is almost it's eliminated from the market. Despite some meme stocks that you have seen, generally the market is very wise. The pricing is almost accurate. But in Pakistan, you have a very small pool of investors. So the mispricing opportunities, the arbitrage opportunities without even taking some risk are very high. So when you have the similar amount of investor base in Pakistan, the markets will be much more efficient than it is now. So essentially, there's no role of brokers. In you states, brokers don't guide. In Pakistan, brokers misguide.
It's very rightfully put. Very rightfully put. I think that last statement summarized it, that in Pakistan, brokers misguide, and over there, brokers are not required. But let me just see, the thing is, in the US, I think generally there is this better awareness because it's a more efficient market. There are rules, regulations that are restricting, let's say, bigger players from manipulating the market as blatantly as can happen in Pakistan. The other element, because and so let me the good thing about platforms in the US and let's say in the UK as well, and more developed countries, is that they have realized that the retail. So obviously Robinhood is one example that everyone speaks about. What they do is they have made the whole trading element or investing element more in terms of a game. It's a bunch of tech individuals created a tech platform. How technology has really progressed in today's world. It's very easy to really create a good interface, a good UI. So they have increase the, let's say, the participation of retail investors in the market. And obviously, as as the markets change and people have a lot of disposable income, and they have money to put, when the interest rates are really low, everyone is looking for that return, and because of that disposable income and no good opportunity out there, then an individual will look at what is easy for them to do. Now, to give Robinhood and let's say a Yahoo Finance some credit, so if you were to ask me in terms of portal, if you go to a Yahoo Finance, the level of detail that is available over there in terms of and the structure of how it discusses companies, what is happening in a certain sector, what is happening within the company, who owns it, that level of let's say the layout is something that, let's say, I won't say a common person can understand, but a reasonable individual who's got a basic sense of the know-how of basic stuff can understand what's happening there. It's not too intimidating. And what they've done is they've taken a step further. Robinhood and also Yahoo Finance have another sort of newsletters that they have that speak in the language of common people. Very slangy type. What is happening in the cookie market? What is happening? And let's say, oh, Apple is doing this. So they really try to connect with the individual and try to make them understand what's happening. And that's another thing that we also aim to do, is basically speak in the language of a common person, right? And let's be honest, right? I mean, we might give you a 40-page, report, which will have all these sorts of details and analysis and finance and all those numbers. But are you really interested in those? I don't think so. We have the time in day to day that we really want to read like a 40-page. It's not like a fiction novel that you really want to understand it. And like Waleed had mentioned earlier as well, what we are trying to do is we want to make investing fun, make investments understandable to you. So you may understand it to the limit that you want. So you should know where your money is working for you. That's about what you need to know. You need to know whether the place you put your money, that company is alive, it's liquid, it's got sufficient cash, it has a decent management. It's not really, doing some expansion or something that that common sense does not, agree with. And I think for us, if we are able to provide that value in terms of allowing the working individual, the individual who is probably not that finance savvy, an individual who's busy day to day but really needs to invest, and an individual who's just lost, right? We need to address all of those individuals, and maybe people at a young age, people who are, let's say, more mature at home, don't know what to do, and really to include them into the market. I think that's a step. And I will also just highlight on the one point that was mentioned earlier. The reason why markets are manipulated is when you don't know the bigger picture, you will always lose the game, because you might see the chart going up and down and someone will tell you to take an entry and you'll exit. But what if that company is going bankrupt and I as an investor already know that? So all those retail investors that have that stock and feel it's going to go up, me as an institution will use that opportunity and get out of the market, right? I will sell all the stock that I have, and you as a retail investor, that's why they say the retail investor always loses. But and the fact is, every retail investor that is not informed correctly will make the wrong decisions, will make short-term gains, but in the long term he will lose. So it's a hybrid. We want to educate, but we also want to take it further and not just leave the customer over there, that leave the individual that, okay, we just told you what it is, now you do whatever you want. We have plans taking it further and really our vision is to make investments easier, make people actually invest and hopefully get work towards making the market more efficient with a mixture of all these strategies that.
So besides the stock exchange, what other avenues will you be helping people to invest in?
So we have so like as you would agree, investments in itself is a very broad concept. Even let's say uh, this very concept that we spoke about, the stock exchange, it's huge in itself as well. Like where will you help us invest? Will it be in scripts? Will you create a portfolio? Will you help us in mutual funds? It's not really a simple question and a simple answer. So when you are dealing with things that are huge or that have that big a scope, it is always good to narrow down the focus area. And for example, we could very easily have also started off by doing the reverse, like helping people invest in the US market, or let's suppose target people in the US and the UK or the UAE and help them target the Pakistan Stock Exchange. I think all of these avenues are there in our mind. We so stock market we started off with because it's really easy for anyone to actually just start investing into the markets. The markets are essentially public companies, right? They are companies that are listed. So if you're talking about the universe of investments, yes, there's real estate, there is so stock exchange. I will just
So
deal with the stock
currently you're
exchange as saying
focusing
investing in.
on stock exchange. Now, the point is that
Correct.
in our economy, which is such a volatile economy, people often have fears of investing in stock exchange because they think that the economy is going down, the stock market is going down, so we never know when it might crash, or we might end up losing all our money. So, in such circumstances, how can people be incentivized to invest? Should they aim for blue chip companies, or because a lot of people don't even know what blue chip companies are, but then they have overpriced stocks. So there are a lot of issues surrounding the whole point that the economy is volatile, and why invest in it, and which companies to invest.
So what other options people will pursue is they'll buy a house if they have a large amount of money, and they'll earn around 4.5% per annum on in terms of rent. That's 4.5%, and that excludes the repairs that you will do after the tenant leaves exits your house. So 4.5%, it's even less than the inflation in Pakistan. So eventually you end up losing money. So the amount of things that you're going to afford today, the same amount of things will be at a higher price next year. The other option is you can get gold, but gold offers doesn't offer the same amount of return. Also, you have to ensure its security. Stock market is secure. Secondly, the amount of dividends you earn, dividends of blue chip company. For example, suppose EFERT was trading around 56 before COVID, and now it's 71. So that includes around 15% of capital gain, and it gives 18% dividend. So that makes it 33%. And you can see the price fluctuations in last 10 years. It'll be a lot lower than the price fluctuations in the real estate market. The plot that you bought in 2016 in phase 8 would be of 30 million, and now it's trading for 25 million. So in terms of stock market and dividend stock market is a lot more safer, and you don't have the same amount of litigations that are involved in property or the security fees that are involved in commodities such as gold. And it's the stocks are secured through CDC. You get a higher return, almost 10 times from that of real estate. You don't have any fear that your money will go somewhere else, someone will take away your money, your shares will be lost. It's completely secured by the government of Pakistan, and you can earn a decent amount of money on that. So it's a lot less volatile than other options available in Pakistan. In
Uh,
case you don't go for penny stocks such as VTL.
so,
And
and
the second part that you mentioned about the blue chip companies overvalued, undervalued. See, uh, you rightly pointed that out. It's not, constructing a portfolio is something that requires a bit of thought, and everyone's risk appetite and their circumstances are different. And that is also the other thing that we aim to address. We believe that everyone has their own risk appetite. Based on the risk appetite, a diversified portfolio needs to be, explained, understood, and created, constructed. Then obviously, you rebalance the portfolio given circumstances that change. But generally, in the difference between investing and trading is more of a daily affair or more of a weekly affair, whereas investing is a combination where you use the trading elements to enter the right time, and then you plan an exit as well, or use it when you want to exit. So essentially, you're right. There will be companies that are overvalued, and see, people will need to know that what a blue chip is, why they should invest there, and those parameters. You want to make it simple and not use the same jargon. Make it simple. This is a bigger company. This company probably you consume every day. Maybe it's national. Maybe it's some products that you eat every day or that you believe in. So we want people to believe in what they are investing in. I think that's the
Now I want to know your thoughts on something, that a lot of people who basically don't have much educational background, I see them investing in the stocks, and they are just jumping in it blindfolded basically, because neither do they educate themselves on the companies they are investing in, or they don't understand the dynamics of the market. They just invest in something and they think that, because they've heard stories or maybe watched movies, they think that people can grow rich overnight through investing in the stocks. What are your thoughts on this?
I'll quickly add, then maybe I'll let Waleed mention his views on it. I think that there is no shortcut to becoming rich, unfortunately. However, you can become rich using the stock exchange. I won't say you can't, you can. And see, I mean, we have to think of the stock exchange as a very simple thing. It's a pool of various individuals having a perception of where the price will go. Now, you can either take it as like a random thing that is going up and you get into it, and more often, you just rightly pointed out, people get into a stock. They'll get into a stock when it's at its top peak and it's right about to go down, and they exit the market, unfortunately, the moment it goes down. So the problem is, again, building the temperament, the mindset that it's okay for it to go up and down within a certain barrier. That's all right. Just relax. As long as you know where you're investing, why you're investing, there needs to be investment strategy behind what you're doing. As long as that is in place, all is good. And you can consistently, like, see, if you're making around, I don't know, I'll be honest, you can make a lot of percentage actually per month as well if you're invested in the right opportunities. And Pakistan is actually an emerging sort of market where the returns are actually quite a lot and can be quite a lot. And if with the right information, see, in finance, information is really important. If you have the right information and you know what is going to happen, and that something is going to be valued well, you can make a lot of money. You can make 20%, you can make 15, 20%, more than that as well. And 20% means that you can probably make up your own investment in, let's say, what, 5 years. If you're making 20%, let's say in 2 months, you can really double your capital or make more of it if you make the right positions. But I think you should think about investments more in the long term and not really think of it more in terms of doubling my wealth, tripling your wealth. In the long run, it will. In the next 4, 5 years, 6 years, it will be a multiple of what you started off with. That is for sure, if done properly.
Also, adding on to that, so individuals went into the market blindly. So that is where Aamdini come in. They learn from their experience. They learn after losing money. So we don't want them to lose money. We want them to educate themselves. We want them to join us. And from from that very point, they'll start investing at the right place. They'll know where they're investing. They'll not make blind decisions, and they'll start earning money rather than just losing money and starting from zero again.
Okay. So I have a little personal question, if you are comfortable answering. That is like, suppose what percentage of your income do you think, or did you start by investing in the market? Because I understand, as guys, you probably have families, and you won't want to put in all your eggs in one basket. So, like, not all of your pay, like your Ali is a banker, and Waleed, I'm sure you've been working as well. So, what percentage would you start with? Like a 10% of your income, what do you suggest that what is a good figure to start with, a percentage to start with investing?
I'll just quickly add, answer the question. Then obviously Waleed can. See, when I first started off, when I was in my first job, I probably see, that's so I'll just structure the answer this way. Every stage in your life, you are at a different place and a different risk appetite to take risk. I would encourage a young person to put most of his money into investments because that's the age you can afford to really build your wealth. And at that point, you can go with half of the money that because let's be very honest, in Pakistan, if you're talking about Pakistan, a lot of us individuals, you'll be living with your parents, you'll be having your own house, and if you just graduated and you're your first job, yeah, I mean, you're probably just going to use your money to, I don't know, eat out, probably just pay your phone bills, and it'll pretty much go waste. You're going to spend it. And I think that mindset needs to change. I think that at that stage, when you are starting your first job, you should start right then. Half of your money, you need to just put it on the side. Start with half. Really pressure yourself in terms of, okay, so I don't have that amount. So if you're earning 50K, 50,000, you're putting 25,000 on the side and telling yourself you're only earning 25,000. That sort of a mindset really helps because you are disciplining yourself that this money is I can't see it. You can't see it, you won't spend it. And once you put it into the markets, that's just an avenue for you to build your wealth. So when you keep on doing this, let's say 3 years is a typical time horizon that a first job would do. You'll be surprised how much money you'll make in the next 3 years. You'll be actually pretty happy with what you have. So see, for a person who's starting off, maximum amount that you can, all the money should be invested. That's my view. For a person who's more, let's say, I don't know, has a family now, has expenses as well. There, I think 1/3 is a good number that people talk about. But I believe there's no right or wrong answer. I think you should just start off and at first step, take a chunk out, put it on the side, and don't look at it. Just think you've got a pay cut and don't look at it. That's the way I would suggest people should start investing. I'll let Waleed.
So I don't usually earn that much, but I have to set aside a certain proportion. So I have a fixed amount. Whatever I earn, I put 10 to 15,000 out of it. So once I get a job, so I'll be in a better position to answer that question. So, but I agree with Ali that first you need to get it to a right percentage that you need to save, and then you need to spend this. So if you go with the proportion that you need to spend first and then you need to save, in that you won't get anything out of it. So you just need to set aside some money and then you should start spending it.
Also, how can somebody sitting in Pakistan invest in the New York Stock Exchange? I'm very interested to know that, and I'm sure a lot of people watching would be interested too.
So, I mean, for example, there are brokers in the US, such as Interactive Brokers, that is, I think, more international individual friendly. It is a bit complicated to understand. I must admit, it takes some getting used to because it's a really supercharged sort of a platform. So it has a universe of things which even I, at this stage, keep on looking at. There are so many tools that you can use to learn about it. And like I think we earlier, addressed this point, there is no such broker that exists in the US. It will be a platform. They'll give you that. And then you'll have to make those decisions yourself. And it needs some education as well, because there are a lot of like stop loss, limit buy, when to buy, out of the market. There are so many other jargons there as well, which need to be understood, and it's very easy to be intimidated. Then you can put a price as well. It's got a lot of flexibility. So a short answer is Interactive Brokers is one way of doing it. I'm not sure if Pakistan has that. Let's say those whether there are some brokers that do that as of now. But I would think that if there is something of that sort, it would be more in terms of opening an account individually with Interactive Brokers and really trading and really learning the market from there. Or you can wait for Aamdini to do it. That's your choice. But we will probably be addressing it
We can
later on.
wait for Amdani to do it. I think because it would be much better if we can make an informed choice. with proper guidance and proper advice, because हमें तो to be honest यहाँ की market का नहीं पता, तो वहाँ की market के लिए तो one would need guidance, and I am sure a lot of people would want to explore this opportunity, and we have members in the states as well, and they would love to sort of explore this opportunity. So when market was sort of okay, so there's a question that is this true that there's a time to enter the market, like when market was sort of crashed during the pandemic was a great time to enter. So how about that? Are they is the time when the market is low a good time, or when there's a bull market? uh, we'll need to explain the bull market, that when it's
So if
yes.
it really depends on what you're investing in. So every time there's a new high, when the market touched 10,000 barrier, people said that's not the right time to invest because it's all-time high. Then it came to 20,000, then it came to 30,000. Now it's on 48. People would say it's not a right time to invest, but if market is bound to go up with every passing year. So there's no right time to invest. It's just like you have to enter into the market whenever you find the right investment opportunity. You just need to look at the individual stock or the company that you are looking at. If it's undervalued, just get into it, irrespective of where the market is, because market will go up with every single day.
Okay, just to add to that, rightly pointed out. So I think what Waleed addressed is that investments should always be thought of as something that you should always be doing and not waiting for an opportunity. Opportunities will keep on coming every day, every month. There will always be an opportunity. But I will also address another part of what was mentioned in terms of what happened in the pandemic. I'll be honest, when the pandemic came and it was coming in the UAE, I knew or I saw, that, okay, this is happening. And because when you read on these things, you know what's going to happen. And this is, so I'll just touch upon the element, what drives stock market. Theoretically, the stock market should be driven by fundamentals. It should be driven by the fact that a company is a cash cow. It is producing a certain revenue. It will produce profits in the future, and you will get a portion as a shareholder of that stock. You should get a portion of it in dividends or in terms of the reinvestment in terms of the price going up. However, this is the beautiful part about the markets. The markets overreact. There are many ill-informed individuals, retail investors, and generally what happens is when a pandemic comes, people panic. They will panic sell good stocks as well. So very good, fundamentally strong stocks will just fall. And that is the perfect opportunity for you to actually enter as well. So I would not say that you should wait for a pandemic to invest, but I will say that if a pandemic is coming and the market crashes and you suddenly see, let's say, a Coca-Cola or an Apple go down by 20%, 25%, 30%, I mean, you should just really be excited and go there and buy it. Or buy another stock, because you just know people are overreacting. It happened in the UAE as well, happened in Pakistan, happened in the US. And yeah, I mean, I'll be honest, I went and I bagged quite a few of stocks in the UAE, in the US as well. I mean, because when you are doing this quite often, you understand that there are some good stocks and they have gone down because people just
Yes,
are doing that.
this whole thing has reminded me of something, blooper you can say that I made. That before Imran Khan was elected, there was this someone who was running this brokerage house, and as you rightly said, they are malaligned. So I didn't really put much thought into it, and he guided me that Naya Pakistan aane wala hai, and the stocks are going to go really up once he's elected. There's a little chance that they might go down. And so what I did was, I went on a spree. I went out and I got all sorts of stocks, and the market went really down after that. So that was like a learning experience for me, and that made me realize that you are so right, there is no right or wrong time, and we can't wait for the right time to make decisions. We just have to sometimes do our homework, jump into it, and then hope for the best, I guess. So
And be consistent.
yes.
Be consistent. That is the key message. You have to invest every month, whatever savings you have, take out money, invest, take out money, invest, and do it consistently over a period of time. Understand where you're putting, your money and then hopefully be able to see it grow. And the point that you mentioned, theoretically, when your general strategy is, for example, in the COVID as well, when the market fell, it doesn't just fall overnight, that it's just gone down, right? It will go down, but you never can predict it's the bottom. You never know what the bottom is. What you should do is, if you know the general direction, you will buy. Then the next day you'll buy more. It'll fall more, you'll buy more. And then you keep on doing that. And it's a strategy, it's called averaging strategy, cost averaging. You do that, and that's the thing. When you do a lot of investment, your temperament gets aligned. But I will also mention, for the most professional of traders and investors as well, it is actually a task to control your emotions. The markets, unfortunately, need to be done with a very calm mind, and you need to understand what you're doing. It's very easy to get tempted, right? You can get
Yes.
tempted, sell, buy. You shouldn't do that.
And one more advice. What advice will you give to people? For instance, like I've guided a lot of people to invest in the stock. Although I'm no guru, I just have some experience, and from trial and error, I've learned a few things. So what happened was that when they did invest, they would start looking at the chart every day, or maybe every other hour, as if monitoring it by the hour, by the minute. And I don't think that's a good idea, because that can really give you stress, because the markets don't move at that level, I guess. How would you like to advise them?
Um, so, in my opinion, I personally don't look at the market once I've made my. So, for me, what my style is, if I'll invest, I'll make my decision, figure out what it is, why I'm investing. I answer these questions to myself. When I know what I've done, I will understand what is my horizon. I will close the trades, and I will not. I mean, my accounts have gone down, let's say $2,000, $3,000, $4,000, $5,000, but I've made double the amount within a few days as well, because I mean, it's human nature, right? If I continue looking at the screen, I will panic. But once you understand what's happening in the broader context of the bigger picture, you will not panic, and you will know what is happening. And the other element is, what people try to do then is, they're trying to do a lot of day trading type of stuff. And honestly, it is a full-time job. If you want to day trade and make money, then yes, there is a strategy to do it. You can have stop losses. You can make money on a daily basis, but then it's a full-time job. If you want to do it, yes, you can. If you learn the proper.
And the risk appetite has to be more as well when you're doing day trading, right?
Sorry, your voice
Yes, I'm saying
broke the
that the
last.
risk appetite has to be more as well if you're day trading.
Yes, and yeah, I mean, but see, with day trading as well, if you understand the indicators, and let's suppose you made an entry, you set according to your risk appetite, let's say a buffer, or let's say 2%. So you're willing to think of it as a game in which you're willing to lose 2% for a 4% or a 8% rise, or a 3% gain. So if you put stop losses in it, that's the problem as well. People, because they don't know, they don't put stop losses. The problem is, the market will just tank down, and you will lose all your money, and then you will probably just keep on waiting, and it'll probably fall even further, and then you'll just be lost. So if you are doing it as a full-time job, it is strenuous. You need to have a big screen. You need to look at the charts. You need to know what is happening, and you need to put appropriate stop losses. If you do that, by and large, you should be fine. But I mean, again, I'm not a big proponent of doing day trading and stuff. I mean, I don't know what Waleed thinks, but it's.
So you can't earn much in day trading and you end up losing every single day. It's like 1 out of 10 days that you'll make money. So day trading is really a no-go. It's really speculative.
Okay. So, any bad experiences that you would like to share with us that might motivate or inspire us to invest? Because, when people hear about successes, they're not won over as they are when they listen to even the pros going wrong sometimes. So, फिर जरा तसल्ली हो जाती है ना कि सबके साथ होता है, and it's all right for things to sometimes not go according to plan. So, anything you'd like to share?
So I think Waleed did mention the fact that when we start up in the market, you do lose money. I've lost initially, but when markets like probably everyone would, if I tell them just to go and invest in the market, they'll go to a broker. They will, I don't know, download, get into some, some exchange, and they'll start, investing the money. Brokers say, ये खरीद लें, ये बेच दें, बस ये ऊपर जा रहा है, and ले लें. And I'll tell you personally, the brokers, I mean, I have consciously at times listened to a broker just to prove to myself that the broker doesn't know much. So what I mean by that is for certain positions in which I was willing to lose, and I knew that this is not something that's going to make me money, I've listened to the broker has gone wrong, and they even covered that up as well. Sir ji, wait kare, ji upar chala jayega. So eventually everything will or could go up, but unfortunately certain stocks which are dead, and the broker is just seeing the price go up, right? And just based on that, they will ask you to put the money in. So to answer your question, yes, everyone does not need to lose money. I wouldn't say everyone needs to lose money. Yes, people lose money. If you do not know what you're doing, you will lose money. You will lose money all the time. You might make money once, but in the broader context, averaging out, you will lose money. However, if you know what you're getting into, if you're getting into a stable stock, if you are diversifying your portfolio, the probability of you losing money is very low. It's very low. And again, there's another thing that people need to inculcate in themselves. And honestly, I'm also, let's say, a victim of this problem. Your money will keep on growing, right? Eventually, you'll see a graph, your money is growing. Now, you need to discipline yourself that how much money do you want to take out, right? You need to take something out as well, right? For example, passive income, you're getting dividends, people reinvest. Now, at some point, based on your risk appetite, based on how you want to, manage your life, you need to discipline yourself that, okay, if I make $5,000 or make 50,000 rupees or 100,000 rupees, now every time it reaches 100,000, I will take out 50,000, I'll reinvest 50,000. That way you feel interested as well, you will enjoy the markets as well, and you will continue. Otherwise, everything will be in the paper, right? It'll go up, it'll go down, then you will say, oh, I should have sold it then. And you need to have a plan. You need to know, when I'm entering, when I'm exiting, what is my goal out of this investment? And like, again, I'll emphasize, it has to be consistent. It can't be a one-day affair that I put my money in and I've doubled it. No, that's speculation. That I won't say it can't happen, it can, but that's not really what we're encouraging.
Yes. So basically, you're encouraging informed decisions rather than just jumping into it blindfold and then expecting your money to be doubled. Informed decisions, but then your money is working for you by the end of the day. Right.
So you need to understand what you are investing in, and then you need to seek professional help to understand better, or to allow someone to look over what you are doing with your portfolio.
Okay. And about mutual funds, before we wrap this up, are you helping people invest in mutual funds too? And what's your take on them?
So currently it's under consideration, but right now we are just focusing on individual portfolios, because mutual funds are much more complex to understand. There are front load charges, back load charges, and then there's some performance commission, and then there's some managing fund. So and the returns are almost nominal returns, the same returns you can get in from national savings. Mm-hmm. So currently we are not into mutual funds, but we are considering that.
And just to add on, see, what mutual funds are nothing but, again, a portfolio created for you, which they say is diversified. But then again, what you need to understand as a, let's say, a normal investor is a mutual fund is a business in itself. They are an institution, they have costs, and unfortunately the costs are high, and they have to make money out of whatever that they're doing. And essentially, because they have those costs, they put it into the like a management fee and a charges, whether they take it initially, call it front load, back load, whatever the jargon is. The point is, it will make money, but isn't that exactly what we are emphasizing as well? That if you're invested in the market, you will make money, and mutual funds theoretically says the same thing. Then the long term, you should make money. However, from personal experience and friends that have invested in the mutual funds, I have as well, the returns are not as attractive as they can be with managed accounts. Unfortunately, managed accounts, or in which you create a portfolio for yourself and invest in, can give you a higher return because the cost element is lower. And the second element is there's no restriction in terms of what positions you can take. So as an institution that has a mutual fund, there are certain restrictions in terms of what positions they can take in a sector or in a portfolio. However, let's say if you are doing it yourself or you're doing it in a separately managed sort of an account, you can take, if you see an opportunity, you can get and take a bigger position in that particular stock, particular sector, and you can make a higher return than a mutual fund is more often than not. So we will be providing information on mutual funds, but honestly, we are more of a proponent of creating a portfolio ourselves and really custom made sort of a thing. And honestly, such things exist. It's just that these products exist for high net worth individuals. Private banking, you need to have, like, let's say about maybe 25 crore rupees or something of that sort to have that dedicated sort of service. We are trying to bring that sort of a level of service to a retail investor. That's our aim. We are trying to give that level of, that level in whatever form that we can manage, that sort of a custom experience to individuals, to retail investors who don't necessarily need to be high net worth. That's actually where we are.
As Naseem has also mentioned, she's had a bad experience with mutual funds. And to be honest, I have too, because there's a huge misconception among people over here that mutual funds are played out to be safe, whereas they're not as safe as they claim to be. And there are so many types of mutual funds, like equity funds, they have subtypes too, and people don't know about that. And just because of the safety element, and they feel that somebody else is doing the work for them by making a portfolio for them, so that's a better option than the volatile stock market. Whereas I agree with you that if we are guided to invest in individually in companies, we could we could get much higher returns, and that would be a better decision, something that is personally managed than a mutual fund. Because personally, I just invested in a mutual fund, and continuously my money is being cut, like on every transaction they cut taxes, and then they have these annual taxes, and that's a lot of taxation cuts. And I experienced nothing like that with my investments in the stocks with individual companies. I'm very happy with the dividends I get from blue chip companies. And I started off with almost zero. Now I have like a substantial amount, you can say. So I think it's a good idea to educate yourself and let Aamdini educate you, and so everybody can make better decisions and build their portfolios. With Aamdini, when you chose that name, um, what were you referring to? Like monthly Aamdini, an annual income, or a long term portfolio? What were you actually envisioning?
So it's referring to every sector that exists. If you
Okay.
need a side hustle, it's for that. If you need to create a long-term portfolio, it's for that. If you need an annual income, it's for that. So it caters to every group that exists in the market.
Okay.
Yes, that's right, Deepak. Yeah. It is basically income, right? And like we mentioned earlier as well, we want to, the twofold element is, number one, awareness. I think awareness is being done by certain individuals in whatever manner they can do it. And honestly, the other thing I will also emphasize that we are trying to promote is that uh, we believe that investment advice should come from an individual who has the background to actually talk what they're preaching. Number two, it has to be coupled with experience in what they are propagating. It's very easy to preach, right? It's very easy for anyone. You would go, let's say, anyone anywhere in Lahore, in Pakistan, there's so many people who have absolutely no idea what they're saying, but they'll still say it. So our goal is ideally and hopefully to build that trust, to really put ourselves out there. So our profiles are public. Whatever we have done is also very much open. Anyone can ask us probably what our returns are in the markets. We're happy to share that as well. What we have invested, how much portfolio we have managed. We are pretty open out there. What we have, what our experience is, and because we are that comfortable and confident about what we are trying to do, and we really and again, what I emphasize is we believe that we are not here to do, because we are just like everyone else, right? Retail investors, we can resonate with that better, and we can then be able to hopefully inculcate the consistent saving concept. And people often mix saving and investment, so it's like whatever you keep on the side is your saving. Now, where you put your saving can either be into an investment, can be just be into whatever else you want to put it, but that is basically putting your money to work. And so that's our aim, and that's essentially what we try to do. That we're trying to do that. You build an income, build an Aamdini for yourself, be it your main, be it your passive one, whatever form that it takes, depending on your own.
So I believe that for someone, for a service provider or somebody who's into production, the best thing that comes from is that if somebody has been the client first, like you have been the investors, so and you can think from an investor's point of view, you can think from now your potential client's point of view. Your experience equips you to better advise them. A broker or somebody else, to be honest, wouldn't be able to do that. So that is why Aamdini is the right platform, and I'm so glad that something like this has come in Pakistan. And I wish you guys all the luck. I hope we are able to have more and more females as well joining Aamdini and building their portfolios. So thank you, Ali, Waleed, and everyone who's been watching today. It's been a pleasure.
Thank you so much, Khadija, for giving us the opportunity
Thank you,
to
Khatija.
have this talk. And we are more than happy. Our handles are all available on social media, and we are more than happy for people that are interested in understanding investments better, in joining us in this journey. We need that. We're not here to give you the recipe for success, but we do know a recipe, and we want to share that with everyone. And we want to build something together that is good and that really helps everyone. That's our aim, and let's
And,
hope we.
and if members from your society have some questions, they can surely reach out to any of our social media handles, and we'll
Yes,
be
please
happy
do
to respond.
share your social media handles. You can email them to me,
Sure,
or
sure,
share them in the community, and they can directly reach you.
sure,
So have a great
sure, sure.
weekend, guys,
I'll do that.
and all those who have been watching us.
Thank you. You too.
Thank you so much, Khadija. Thank you.
Signing off from here. Good evening.
Thank you.
Bye.
Good evening. Bye.